2026 has been a good year so far for the PSG SA Equity Fund. Not only did this fund surpass a 1 billion rand in assets under management milestone as of the 31st of January 2026, it also recently won an award. It won the award for SA Equity SA General over 5 years in the News 24 FundHub Industry Performance Awards. Joining me today to discuss this fund in more detail is Fund Manager Mikhail Motala. Mikhail, to kick us off, can you remind us of the objectives of this fund?
Yeah, thank you, Adri. The awards and accolades are always welcome. They're a great validation of our philosophy, our process, and our execution. But we don't rest on our laurels. We focus on trying to achieve the objectives for clients going forward and stay humble while doing so. So coming back then to what those objectives are, for the SA Equity Fund, it's to beat the capped all-share index and to be in the top quartile relative to peers over appropriate time periods.
So the FTSE JSE capped all-share index is considered to be relatively concentrated. Now, what are the challenges that come with that when managing a fund like this?
It has become more concentrated. That is primarily because of the performance of the gold miners and the platinum group metal miners, or PGM miners. Combined, the gold and PGM miners today constitute around 30% of the index. For context, as recently as September 2022, that number was 10%. So in the short space of just over 3 years, those two sectors have trebled in relative terms. If we then overlay the banks that are listed on the JSE, as well as the combination of Naspers and Prosus, and we add that to the gold and PGM miners, we're looking at an index weighting combined of around 60% in those 4 areas. So it's really tough managing against an index that is that concentrated.
But index concentration is not only a South African phenomenon, or is it?
Yeah, it's not a South African phenomenon. People are well aware of the dominance of the Mag 7 within the US market, and then of course with the related dominance of the US market in global indices. The extreme is in South Korea, where 2 stocks, Samsung and SK Hynix, constitute 60% of the index, just 2 stocks. So the concentration is not a South African phenomenon at all.
Now in 2025, this index returned over 41%, and there must be some challenges that come with this.
Yeah, and beating an index over a short time period where it's driven by a momentum market is exceptionally challenging. And as a reminder, in the world of equities, a year is a short period of time. So in fact, Morningstar recently published some research suggesting that only 10% of managers beat the index, beat the capped all-share index, that is, over 2025. And we were marginally behind December to December. But there are all sorts of nuances when looking at shorter-term numbers. So whilst we were behind December to December, we were ahead in January to January and February to February. So we look instead at appropriate time horizons. And in the world of equities, we think 5 years plus is the number to look at. And over those appropriate time horizons, our performance has been really good as we've managed to keep pace with the market in the boom years and deliver alpha in the lean years.
So looking forward, how is this fund positioned?
So if we segment the JSE into its 3 major buckets, those are SA Inc., resources, and then the Rand hedges. Currently, the SA Equity Fund has around 54% in SA Inc., around 30% in the resources, and then the balance in the Rand hedges. If we compare that to the index, it's roughly a 10% overweight in SA Inc. That's funded equally 5% and 5% from the resources and the Rand hedge sector. So that's the meta positioning. Taking it one level deeper, within SA Inc., we have a marginal preference for industrials over financials. And then similarly within resources, we have a preference for the diversified miners over the likes of the gold and the PGM miners.
So today we spoke specifically about the PSG SA Equity Fund, but can you give us an idea of how SA equities fit into our broader process at PSG Asset Management?
The SA Equity Fund is one of our smaller funds in our suite of funds that we offer clients. Our integrated equity-centric funds, which can invest on both the JSE and offshore, are substantially larger. And that's because clients have rightfully bought into our global equity capability. As a reminder, at PSG Asset Management, we've been investing globally since 2008. Then also our multi-asset funds enjoy similar success because clients, again, have rightfully bought into our multi-asset capability, supported by our award-winning fixed income franchise and our asset allocation skills. So SA Equity sits as a unique proposition in that it's a building block solution. It's not an integrated offering. But as a building block solution, we believe it offers a fantastic opportunity for would-be clients in this space.
Mikhail, thank you so much for joining me today and talking about this fund in more detail.
It's a pleasure, Adri. Thank you.